Hey guys, how are you? So today we had this FOMC pump. Actually, it was a dump. Where was it? Yeah, it was a dump and a pump, and then I knew that it would be a 4 hour dump after the pump. So basically, we had still steps trends. We had 1 hour going up. Oh, it was going down, and then there was a breakout, so we went up. But then that was the end of the 4 hour, the end of the 4 hour trend. So I thought that it wouldn't keep pumping, and then I went short, and I closed here, and then I short a few 3 minute trends, and then I short here, closed here probably, and now I'm long. The reason I'm long right now is because we are at the support level. That's one. We are at a major support level for daily. Let me switch to daily chart. So we are at this support level. Okay, major. That's daily major. And obviously we have a range here that acts as support as well. So the Kraken taught me the other day. It's called the sorry about that, the smart money concept, and it's got order blocks and what's the other one? Fair value gap. So that daily is supposed to be the fair value gap, and we hit that support, and so I thought that the 4 hour downtrend could bounce. So right now we are not sure. Right now we can't see anything. Right now what we can see is this is going up, and this is just 15-minute trend that's going up. So it's not, you see, maybe this is the top of the 15-minute trend. So and yeah, maybe my long can't hold that long. I'm going to close here because it paused at the bottom of this previous candle, and I'm just going to market the close. That's it. I got a few hundreds, that's fine. So that's actually not 15-minute, that's actually just 3 minute. So for our next one will be at this area, I would say here. So that would be our next long. I posted this, can you see the Excel sheet on the top left corner? I posted that in Steel Step. Can you get that? Can everyone get that? So that Excel sheet is is a setup for a 5x long, or not long, like 5x trades for DOGE. Hold on, there's something wrong. So over here, the plan, oh, well, I closed. Well, the plan over here is if, so this was my previous one. So if is just 10, so we'll do 10. So our, not this one, our next one, because this is too late now, I won't be spending a lot of time. This is just an introduction to the next one. Our next one will use 10. I mean, you can use 10. I'll use my normal one. And then we'll keep this as a leverage. And we'll keep the rest the same. And we'll do 10 trades. Okay. So 10 trades. If one trade takes about 8 minutes and then we have to wait for 6 minutes, then that's about 14 plus maybe 1, maybe 3. That's about, let's say 15 minutes per trade. So if we were to do 10 trades, that's 2.5 hours. I'm not sure if we can do that, but I'll try 2.5 hours live streaming. So I'll find a good time for that. So after the 10 trades, obviously the yield should be 0.7, right? Because that's the average. So for 0.7 yield, by the end of the day, at the end of the session, the live streaming, should end up with 41%. If you don't get that, it's fine, because there will be delay and there will be slippage, so it's fine. But at least I would expect you to be at 20, like half of it, 20%. And then if you scroll down, you'll see the long, short, keep everything the same except for the yellow box. The yellow box. So if you are in long, if we want to enter long, or like right now, if we want to enter short, we can enter it right away. Not right away actually. I'll teach you a method to enter this short. We are looking to long actually, not short this. Let me explain this. Let's finish explaining this. So just if you want to enter long, just put down your entry, and this is my configuration for you. So basically what I'm saying is that I cap your stop loss to 3%. So this will be a stop loss if you enter at this point. This would be a stop loss, and I cap your take profit at 3.5%. Okay, let's short this. We'll do hold on. We'll do post only to save cost. Where is it? So the reason why I do post only is because we are going to do a lot of trades, a lot of times trading. Frequency is high, so so you can see that we broke the low of the previous candle, and now we are now retracing up. So ideally we can click that, and that. I'm not used to do it on the desktop website. I do it on my phone. So basically we do this and short. No? What happened? Well, let's wait a bit. seems that it's going to pump past this. If it does, then that's not an entry because that would be my stop loss, and my stop loss will be hit. Yeah, that's actually that's my stop loss hit if I enter just now. So what we want to do is that we want to use the 3-minute chart and enter it based on the candlesticks. The win rate, I tested it today. Of course, this is also a technique that's tested many times by others. The win rate is super high. Normally we draw trend lines normally, right? But you said that you can't see 30-second charts, so this is my solution for you. My solution is for you to use candlesticks. Okay, I don't know why I can't enter short. Why? Oh, I can. Oh yeah. Okay, so that's my entry, and now I set the stop loss according to the Excel sheet. So what's my entry? Short entry 1.26 to 126. Yep. That's very close. So the stop loss is capped at 3%. And since this is not an impulse move, our impulse move is in the up direction, uptrend direction. So for the sake of introducing this technique to you, I'll do this, and most likely this will go sideways and maybe hit our stop loss. So we want to trade the impulse wave of the 3-minute trends. That's why I gave the waiting time 8 plus 6 or 8 plus 7. Yeah, forgot one thing. I will take profit. Maybe it won't matter now because it looks like it's going to hit stop loss. Limit, take profit. That saves some cost. So we are saving cost both ways. We're saving cost when entering and when exiting. So if you're using Bybit, then you'll have, what was it, 0.01% fee as compared to your market entry. Your market entry should be about 0.06 if I'm not wrong. I think that this is purple going up, which is the 15-minute going up, and the 15-minute shouldn't be at the top yet. I would expect the top to be around, well, it's a bit more, maybe around here. So what we are doing is we are stupidly in short to get to this area, which is really quite stupid. So I'm going to close if this shows any sign of breakout. I'm going to change the stop loss to the previous candle top. Okay, if that candle top is breached, that means it's going up, and that lowers our stop loss. What's it? Okay, so just wait for it. And since we are in this uptrend, we should actually be entering this trade, this long, when this candle is broken. Chill music. You want chill music? You know what? If I put on chill music, maybe they're going to mute my YouTube video when it's published. I don't know where to get the so some of the music that you guys showed me previously, non-copyright music. Well, I have to find the author. I have to write down the names, the titles. I'm quite lazy to do it, so please bear with me just talking. I don't sound too bad, right? So as you can see, it's been a few minutes and we are stuck at 0, and we have to actually just close this. The reason is, if this is an impulse wave, it's going to make profit within minutes, and it's really not a lot of profit after a long time waiting. So what does it mean? It means it's a retracement, or it is in the midst, is in the transition period. So we have to check whether we are in the transition period. I'm just going to close this. Yeah, I closed it, and this will likely move up. So the transition period is where we have this. This is the transition period where there's a change in the reversal. There's a reversal. So I told you that I'm going to teach you how to trade 3 minutes. So basically you have to know still step. If you don't know still step, then you can't really use this. Okay, so you still have to know still step. So where do I stop? How do I teach you? Well, just use the Excel. The Excel has the trade configurations, and with that trade configurations, you find the breakout of this candle. For example, now there's a breakout of that candle, and we can enter now. Post only, yeah, long. Let's see, do we get it? Yeah, it's filling up. How much got filled? 31. That's not a lot. That's just, oh, it's filled up. Okay, so it's filled up at this moment. So basically we set our stop loss the moment, where is it, here, so we're in long 12618, yeah, and our stop loss, always set your stop loss no matter what. So we have a limit, take profit at 0.7%. 0.7% is around, let me check. Oh, actually it's just here. 12706. Yeah, 12706. Roughly there, the top of that, roughly. So it can make a double top and we get our 7%, 0.7%. It looks like it's going down. It looks like 15 minutes is going down, but let's see. We have our profit, take profit and stop loss set in place. We just wait. There's no stress. Everything is in place. Just wait. You know what? The bottom of that candle was taken out and we should actually close. That would save us some money in the stop loss. And that was taken out as well. Well, it's just 0.5. I'll let it hit. I think we did a mistake. So there was a breakout, but there was also a breakdown on this candle. Should have waited for this candle to close before I enter. Yeah, my stop was taken out. This is 15-minute going down. So what do we do now? What we can do is we enter short. We use post only entry at 0.125718. We'll just do this. Just do this, this, and this. The reason why I say that is because this bottom. Oh, is it done? Yeah. So why we are entering short right now is same technique. We have a breakdown, right? of this. So right now what I can see is 15-minute breakdown. And we also have breakdown of the previous candle lows. So we enter short and we enter our stop loss. Let's see. You know what? I think using our normal method is a lot better, and that's a fucking breakout. Yeah, that was so. That's quite bad. That's quite bad, really. I still think it's the top, but maybe it's going to make a bit of lower high before coming down. Guys, if you want to say something, you want to chat while I do the live streaming, can you do that in the Discord group? Because I get notification. If you do it on the chat on YouTube, I don't actually see it because I don't have the window open. It's going sideways with low volume. Yeah, very low volume. We could be chopped over here. So that signal was for weekly breakdown. Sorry, downtrend breakdown. This is our LFG pattern. LFG pattern. So let's cancel our take profit since it's LFG. We entered short at the LFG, at a C, at a G. Sorry, this at a G. So let's cancel that because at the LFG, if we enter at a G, that should make a lot more than just 0.7%. So the Excel sheet take profit is an average, is a standard average. You can follow it. It has a high chance to guarantee your profit, and it saves you money because you save fees. You do limit take profit, so it saves you fees. It's only 0.01%. But the downside is if it dumps or if it pumps more than 1%, then you're going to lose that opportunity. So my suggestion is when you see a purple LFG, you remove that take profit and do it manually. So you can see your profit according to the Excel sheet. The ROI is 3.5%. So if it hits 3.5%, if you want to take it, just market close it. If you don't want to take it and it's LFG, so let it go, let it run down, and see if we can hit this area. So that would give us about maybe 10% profit. But you know, LFG should make a lower low. That's what it should. That's what it should do. LFG is the pattern that gives the most profit in a trade. Maybe we should stop after this. The volume is quite low. The volume is quite low for 3-minute trend, and it's going sideways. That will get us chopped. Yeah. I think we should just close it because it went past the previous candle top. That should be a reversal of this line. Okay, so let me check 30-second chart. I know you don't have this, so that's why when there's a breaking past the previous one, you should just close it. But I can't believe it. The moment I go online live trading with you, it goes sideways. And before I did that, it was so in a good it's got good volume, good trends, and everything. Yeah, hit my stop loss. Too bad. We are not in the right condition. What we are seeing right now is this is double top. This didn't make a high, so that's not a continuation. that breakout from that the top of the candle breakout, that was 1%. That could have been the 1%. The key point of the I think the best way to do this, the 3-minute trend trade, is to you need still step, you need the 3TF confirmation. But if you don't really know still step, just make sure that you know how to draw the purple line, because that's the immediate superior trend line. So with the purple line, with the immediate superior line, then you're able to trade the lower one, which is the 3-minute trend. You know what? 1, 2, 3, 4, 5. That's the impulse waves going up. And now we want the correction. And after the correction, we can long again. But it's going to take too long. Do you guys understand how to do it? After this simple, brief explanation. Anyone here? So, Hassan, you're asking what I was talking about. So I was talking about if the white was going down. In this case, actually, the white was going up. There's a reversal of the white, but it's not confirmed because we don't have the higher low. We don't have the purple higher low. The white was coming down from here to here, and there's a breakout. So there's a breakout of the white line, and so there's the white line. So with the white line going up, we should have impulse of the purple going up, and within the purple going up, within the one trend of the purple going up, we have impulse of the yellow going up. You see, this is the impulse. So every impulse, it makes on average 0.7%. That's for DOGE at the current market condition. It can make more than that, but on average is 0.7%. If you see that just now what we were shorting this, right, and we didn't make a lot. That was just like what was it, like maybe 0.4 or something. So that's the correction. The impulse should be going up, 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 and that should make more than 0.7%. So what we want to trade is oh yeah, are you asking about LFG? So the LFG should happen later. So the LFG, no, not this. How can I draw? No, I can't draw here. So basically, if this is, what's that? If this is I'll just use this, okay? So this is what I call the ABC correction. So basically I named the ABC correction LFG because people like to measure, I mean Coke measures the Fibonacci and confirms that this is the ABC, but to me I don't put so much attention. I don't pay attention to the measurement. I just read it. I read the chart and I see that it's ABC and I call it LFG because it can be in any kind of measurement. We have to be flexible. When the pattern comes, we just see it and we assume that it's going to be LFG because not only from this pattern we confirm the LFG from the still step method for with other trends as well. So read a bit about Elliott wave. You should be able to understand LFG better. So at this moment, this is what we're looking for, down, up, down. But like I said, I don't measure this, and this could be here, this could be, you know, for Ethereum, you know that I trade Ethereum most of the time. So for Ethereum, we can see that a lot of times it does this. It's the A, B, and C, which is just very short before a breakout. And this breakout is the purple breakout, and that could yield a lot. So it could be 2% in a single move. So for example, let me show you. This is the 1 hour continuous going down, continuous downtrend, and we have an LFG here, and this is the purple up, and no, this is the yellow up, yellow down, and yellow up, and then down. So just now I short from this breakdown of, so if we zoom in, you can see that at this point this was broken, okay, this was broken, and I went in short at this point, and so it went down. So I put the stop loss according to this to the Excel sheet, and then when this candle was over, when this candle was closed and a new candle appeared, I put the stop loss at the top of this candle. Does it make sense to you? Because when this candle breaks, that's the breakout, right? And if it's not a breakout, if it's a continuous downtrend, then it should not break the top of that candle, and it should continuously go down. So it went down as planned because that's LFG, so I expected a lot of profit from that single move, and that was about, I can't remember, it was, I closed at 15% and that was 5x, so I closed at 3% profit, so 15%, 3 times 5. So that's LFG. So the Excel sheet on the left corner, on the top left corner, you can see there's a TP and SL. So you put that as when you feel comfortable. You should always put the SL. The SL is limited to 3%, and the TP is 3.5. But you can get rid of the TP when you see LFG. Do you get what I mean? If you enter at the G or the C, basically here, then you get rid of the TP. The reason is because that that breakout would make you more than just 3.5% profit. Yeah, Andre, I'm sorry. Yeah, we'll make it back. Don't worry. 4%. Look, I lost 400 too. Don't worry. Don't be afraid to hit your stop loss, please, guys. StealthStep has high win rate, and I'm not afraid at all by hitting my stop loss. Hitting stop loss is the best thing you can hope for, because if it doesn't hit your stop loss, like here, if it doesn't hit your stop loss and this continuously go up, it could happen, you know, and you would lose more than 3%. Is that something you want? I don't think so. Just cap your loss. We'll make it back. So you can choose to not trade every single move. For example, this is going down. I'm not trading it. I don't choose to trade it because this is the correction wave of the purple, right? This is supposed to make LFG. So I want to long at the G so that it would give me a lot of profit rather than just I don't know, maybe 0.7. Well, it can be 0.7, and sometimes it goes sideways before a flat breakout, and that won't give you any profit, barely any profit at all. That can give you maybe 1%. That's not worth it, right? But of course we can still trade it. It may not give you 3.5%, but you'll still end up in profit. And also at this moment I'm discouraged to trade this correction wave. That's because we see sideways range movement. You see, the volume is quite low. So basically this is the range with the volume, and now our volume is roughly around the same That's not something I want. I want profit with and profit comes from directional moves. If it's not directional, if it just goes sideways, then no, just don't trade it. So I said that each trade can take 8 minutes to 10 minutes. So for example, this pump, yes, that took about 9 to 12 minutes from here to here. 3 times 4 bars. That's 12 minutes. And I said that we can consider the retracement or the correction of this uptrend for about another 2 bars. That's 6 plus 12, that's 18. So for each trade we take 18 minutes, but of course it's just an estimation. So for example, in this case, the correction happened across these bars, and that was 1 2 3 4 5 6 7 times 3, that's 21 minutes of correction. And then there was a pump, and then correction, and this correction, it took 1 2 3 bars times 3, that's 9 minutes correction. That's still okay. I consider for correction 2 to 3 bars, and that's especially true for higher time frames. For example, if you look at the hourly, you can see that this is the hourly going up, and then it made just 2 bars of correction before further going up, and we have 1 2 3 bars of correction, 3 bars of correction, 2 bars of correction, 3 maybe, 3 bars of correction. So roughly 2 to 3 bars for correction. For the impulse sometimes it can be 3 as well, sometimes it can be more. When there's a big move like this, 1 2, is only 3, 1 2 3. For this one, 1 2 3. For the impulse move is also 3, but sometimes more. Okay, so less bars for correction, more bars for impulse. You can use that as a guide as well. Use it as a guide for drawing your lines, for predicting when the trend is going to end. So for example, if you are in this candle and you are in short and you don't know when this is going to where this is going to end, it's simple. For example, you're here, okay, you wait for the next candle, this candle to close, and if this candle closes with a lower candle, lower high, then you keep your short, and it goes down, and the next one comes with a higher low with green, then you can either close here or wait for a bit of retracement, or yeah, retracement to go up, right? Okay. This is a lower high, and you can see that's probably, this is, look, 1 2 3 4 5, that is probably the A, but I can't say for sure. That can be the A, and this is the B and another C here. So it can be a flat correction before breaking out. That's why I said you're still okay trading this to this. You'll probably break even, or you'll probably make some profit, but try to make profit. When you see that the market is slowing down, the candles are slowing down, and it's correction wave, then you should be wary that maybe you need to close earlier than your stop loss. So stop loss is a loss, but if you close early, you're still in profit, right? Or you won't suffer as much loss. We have high. See, that's our breakout. That's our flat breakout, and no correction, no obvious correction. There could be a correction here from in this range. That's the correction, and then we have a flat breakout. And what does it mean? Does it mean I extend my trend line? You can extend your trend line, but you can also do this. There's a breakdown, and you count the wave. There's 1, 2, 3. Maybe this is a 1. I don't know. There's 1, 2, 3. Maybe 4. There's a breakdown, right? So 4. There's no breakout. So yeah, it's quite strange. But anyway, I think that this is the range for the flat breakout. And now we have purple going up. So if we consider this as a flat breakout, then we can do this. Yeah, just like that. So I like to snap my lines, but there's no magnet here. I do the magnet. I use the magnet manually. Oh, look at that. So if we go on, so the technique that I told you just now is a standard technique that a lot of people use for price action, trading with price action. If we look at the 15-minute chart, there was a breakout here because there was a breakdown first, and then there was a breakout. So you could long here and put your stop loss there, but the problem is maybe in this case we had as a range, we had a sideways movement, so this stop loss wouldn't be a lot, you see. But for 15-minute trend, if you want to use our level 5x with that amount of stop loss, sometimes it can be too much for you to lose, so you wouldn't take that trade. For example, if the stop loss gap is 2%, 1%, what would you do? It's going to be too much loss, you see, too much stop gap. So do it on the 3-minute trend, 3-minute chart. You can use the 15-minute as a reference for the trend, you see. For example, you use this and you draw the trend up to this point where there's a breakdown, and then draw another trend for the breakout. and there you go, you have a breakout of the 15 minutes. So it was right here, that long range. Yeah, the volume is low, market tends to move in sideways direction. So trade the impulse waves. Maybe trading at night is not maybe, but usually trading at night gives us a sideways movement. So this afternoon was okay. So this afternoon I didn't trade this part. I started at about here. And I traded up to here, and FOMC started and it dropped, it went up, and then it dropped. So do you guys have any question regarding this way to trade it? This way of trade execution? If you have any question, take a screenshot of the video, of the part of the video that you don't understand, and ask in the group. So what do we do now? We have a possible breakout at this point or this point. Okay, because it's flat breakout, it's hard to say. Normally what I do is I just draw this line, and anything above that line is the 15-minute uptrend. So basically we now have the 15-minute uptrend. Actually it's good to trade. It's a good condition to trade, because right now we have this. So now what we are looking for is a retracement of the yellow, right? So after we see a retracement of the yellow, we get into the trade, because it's moving in the still step direction. So I call it still step, so it's easier for me. So I hope you understand what it means. Let's wait for a bit more for the retracement. It should do about 2 to 3 candles. So 2 candles, 9 minutes, 3 candles, 9 minutes, and then we'll get into long. But then we'll see if the purple is still going up or not. If it's not going up, we don't take the long. Oh, I see someone is saying, talking about Elon coin. Yes, there is Elon coin, which is very funny. I think it's not related to Elon in any way. It's just people trying to make money. And sorry, buddy, I don't have Elon on this Binance. If anyone is using KuCoin, it's quite risky to trade this, but you know, I see a breakout, a retracement breakout for that Elon coin. It could go up. It's on KuCoin. But I still think it's too risky to trade that. But at this moment, I can see that it's going up. For retracement to go further down. If you're wondering what I'm talking about this. Elon coin. Similarly, we have a breakdown. What's this? No, that could be daily. Let's check. Yeah, that's daily. And we have the 4 hour going down. And now we have the 1 hour breakout. So the 1 hour breakout, it could do this. It could do 10% from this point on, from this point. But what's your stop gap? Stop gap is 2.4% for a maximum profit of about 10%. That's really good, actually. So anyone could try it. Why not? Just use 1x, or don't use leverage at all. This is I don't know whether this is futures or what. But why not? You know, anything related to this is just bullshit. It's just I don't know what to say. But yeah, what makes money is good, right? if we draw this long trend, this is going to be a breakdown, you know. I'm not comfortable longing at the retracement. Well, if this is going to be a breakdown, then we have to wait for the formation of that LFG, right? Okay, let's say we don't wait. I have to go anyway, so we don't wait. We're going to long this. You guys don't have to follow what I do, but let me just do it for the sake of live streaming. Ideally, what we want to do is we want to wait for this candle to close and for the next candle to appear, and when the next candle breaks this, the top of this candle, the high, then we go long. Okay, so right now the high is 0.128110. You can see from the OHLC information right at the top, that's the high. I'm really not comfortable longing this right now, because I can see that with the extension of the purple, we have a breakdown of that. We are going to do the same thing. When this top is broken, we're going to use post only long, and we are going to target the price that's a bit below the executed price. that's the breakout. Let it recover a bit and do the post only long. I'm doing it on my phone. It's just more comfortable for me to do that. So we long at this point, and we can put our stop loss here, or we just follow the Excel sheet. Let me use it. Long at entry 0.128118. So that gives us stop loss of I don't like this. You know, this is a wrong move. Do you know why? Because like I said, this is correction for purple, right? And I just showed you how to do it, how to do the execution of the trade. But I don't think this is going to be in profit, because or if it's going to be profit, it's going to be very minimal, because this is already the retracement. This is already could be the end of the yellow line. This could be the end of the yellow, and it's already going down. So I really don't like it, but it's fine. So the yellow retraced for one green candle, just one, and it already made a breakdown of the previous lows. So I really don't like it. I'm going to close this. This is a continuous downtrend move. Let's actually enter short at this moment. We can wait a bit more. That is the lower trend that's now retracing up. So at the end of the retracement, I'm going to close, or maybe just close now. Save another 1%. Save 1% of my stop loss. So like what I said just now, when you enter long and you put your stop loss down, when the new candle appears, you move your stop loss to the bottom of this, and that bottom would have been hit at this point. So yeah, let's stick to the standard rules and close it, because that would have been the stop loss that's hit. That's not a lot of loss, just, what was it, 1%. So we still can't confirm that this is the top of the yellow. It can still move up, you know, because there is no significant movement here. There is no significant candle below this previous candle low, and also there is no lower high. Basically, this is what I call lower high, and I want it to continue on to this candle, but this candle is now making a high of this candle, so it's not a confirmation of the top of the close of this trend. So this is how you do it without the 30-second chart. It is not the best way. Drawing trend line is still better, but it is still the standard way of how people execute trades actually, really. take note of the low of this candle, which is 0.12835. So at this point, 12835. If this price level is broken, then we can execute our trade. So basically what we want to do is to post only short this. Yeah, and the order was filled. And now we want to enter the stop loss and take profit. So 0.12837, that's our entry to give stop loss at 0.12914. And take profit. You know what? This could defy gravity. When you see something like this, parallel channel basically, it's almost parallel. That could defy gravity and continue up. but that's just assumption, and that's not a standard rule that's reliable, that can be replicated every single time. So right now we want to be careful of this top right here, because if that breaks, that means that we didn't enter at the correct time, or this could be a reversal already going up, and that happens with low volume like this. That happens. That will be the last trade. So when it's closed, I'm going to end this live streaming. I hope you guys understood what I talked about. It's quite simple. The trade execution is quite simple. You have to understand still step. You have to know the direction. At least you have to know where the purple is going. And when you know where the purple is going, try to get in in the same direction as the purple. And it shouldn't be, you should have a high win rate. It's even better if you follow 3TF, still step direction. That means at this moment, at this point, you would want to wait for the G down here and long it. That would be the best direction. That would be the best, the safest trade that you could make. It's going sideways. Not looking good. And this is a breakout. Let's close this. It's not a good market, really. Good market condition. And I'm looking on my other screen at other coins, and they're very sideways as well. Ethereum barely makes any profit if I trade this. So Ethereum for the last how many hours? For the last 2 hours, Ethereum was in a range of 0.9% movement. let's close this 1%. I don't want to close in loss, you know. That's the mentality that we all have. But when something when this is broken, the previous candle is broken, you should really close it, because that's the breakout. Yeah, I closed. So basically that's how people trade price action. And you know, that could be the LFG, and this is the breakout, and it's going up. Why don't we long? Let's check this. So if you long here, that's the breakout from the previous candle. That's actually quite good, a good place to long. I'll long this, but let me see. I'm checking trends. I'm checking the purple. The white is still going up. The purple is a bit in question. The reason is because it's this sideways, and this sideways could mean an extended 3-minute going down and an extended 3-minute going up before further going down. So it's a very shitty market condition. But we trade according to the rules, so that we minimize our risk, we minimize our loss. Normally when this point, the highest point is broken, then that means the breakout of the purple. As you know, if there's a breakout of the purple, you can confirm that by waiting for another yellow, and when that comes, long that, and you should be safe. So let's say if we long now, our stop loss is quite huge. Our stop gap is 0.6%. 0.6% times 5. Oh, that's actually 3%. That's within our tolerance that we set previously, according to this Excel sheet that I made for you. It's going down. Yeah, maybe that could be the extended yellow, like I said, the extended yellow. So do we want to short this? To be honest, I've lost quite a lot trading this slow market. I don't want to enter that. But even in slow market, even in this low volume market, we can see that the technique is minimizing your risk, but of course you're going to hit a lot of stop. And if you get into long at the G right over here before the purple breakout, that's really good, because that's really going to make you a lot of profit. So short here, put stop loss here. No, not good. This is just tight range. I don't want to trade this. I think that's the end of this live streaming. I hope you guys understood this 3-minute trend trading. When the market condition is good, you can execute 3-minute trend trading even in correction. Because just now, this afternoon, I was trading in both direction, up and down, and it worked out fine. Thank you for watching, guys. Like I said, if you've got any question, just take a screenshot and ask me in the group. So for anyone who doesn't know, who's new, who joins this live streaming, the address of the Discord group is in the description below. So like and subscribe. See you guys.